Welcome to Access a Trader, the #1 community for high-level traders to learn valuable trends and strategies, connect with other top traders, and become consistently profitable. Click the link in the description of this video to receive a special offer on our revolutionary PS60 training, access to our daily interactive webinar filled with experienced traders, and so much more. Space is limited, so make sure you don't miss out.
Hey guys, good morning everybody. Dan Shapiro back with AccessATrader.com weekend update show. Hope everybody is doing okay. I want to welcome all you guys who are joining us on this weekly video from StockTwits, our friends on YouTube and Twitter and other social media platforms. This video actually goes out Monday through Thursday to our good folks, and it goes to the social media mass on the weekend. So if you guys are enjoying it, good job. If you have any questions, always feel free. So let's talk about the markets, right? Let's talk about the markets. 8 days in a row, right? 8 days in a row. The Dow had a losing streak of 8 days in a row. This is going back to 2001, the longest losing streak. Nobody really noticed, right? Nobody really noticed until people started noticing. We'll talk about that in a second. If you've been watching these weekend updates for a while now, you got to go back to about a couple of weeks ago, okay? And this really shows why technical analysis is just so good. I mean, it really is the most purest lifeline you have as a trader. It really is. And there's nothing that the market, and we've said this countless times, there's nothing that the market can do to you. There's nobody that can, do anything to you that you can't do yourself if you miss the signs. And 2 weeks ago, about 2 weeks ago or so, when the Dow Jones Industrial Average closed so innocently, right? So innocently under the 5-day moving average, it kind of played out. It was on a weekend and we started talking about it. And, again, a lot of people really just don't put a lot of emphasis on the 5-day moving average, whether you're just not exposed to what it is. Nobody's ever really, shown you their point of view of what it could turn into, or maybe just have the blinders on. But the 5-day moving average, and I've been using that, for a long time. I mean, a really long time. And it's been the purest form of short-term sentiment that you can have. Again, it's not a pivot, right? It's not a pivot. There is no longer-term ramifications above it, but it does show a potential of a shift of short-term sentiment. And if you go back to a video about a couple of weeks ago, the Dow so innocently closed on the 5-day moving average. And I basically said, hey, listen, we could expect a back test on the Dow Jones without anybody even noticing. And that's exactly what happened. So we started seeing all these headlines pop up. And again, these are not new headlines. Again, you can go through social media for the last 2 weeks and you can go through MarketWatch and Yahoo Finance and anything that you get your disseminated news from. And you'll see, again, the headlines: China trade war, China trade war, China trade war, more China trade war. Again, this has been going on now off and on for 6 months. There's nothing materialistically have changed for the last 6 months. The IWM has led us higher, remarkably, right? The NASDAQ 100, the QQQs have followed, but the Dow Jones Industrials has had a lot of hiccups, right? Had a lot of hiccups, but at the end of the day, if you ask any active, especially intraday trader, does anybody really care? Does anybody really care about the 30 stocks that make up the Dow Jones Industrial average when you have 25,000 other companies, whether they're trading on the S&P, and of course, there's crossover. In the S&P, NASDAQ 100, IWM, even the over-the-counter bulletin boards, whatever the case may be, does anybody really care about the 30 companies that are in the Dow when you have 20,000 companies that are giving you so much value and the market's giving you so much good value on the long side? And when you started seeing the Dow go down 8 days in a row, you started to turn around and say, well, what's the difference? The NASDAQ is very strong. The Russell is very strong. It's only strong until it's not. And the most important part of what we saw here was how things started playing out towards the latter part of the week. And again, the one thing that I asked a very honest question going into Friday's session, I asked, well, I have a question, like, why is it so important now that all these media outlets started talking about the Dow is down 8 days in a row? Well, why was it important down 7 days in a row or 6 days in a row or 5 days in a row? because the market was still hot. The market, right? The NASDAQ 100, the IWM. Again, if you go back to only several days ago, I mean, look at the run in the Russell, right? Look at the run in the NASDAQ 100. And what's amazing about the run in the NASDAQ 100, there's so much exposure to China, right, via the semiconductors. And the semiconductors have been going down, and there's a really good mirror image of what the Dow Jones Industrial Average has done, and so with the semiconductors. But yet we were still at relatively all-time highs. And when you look at the stocks in the Dow Jones Industrial Average that had, again, big exposure to China, you got your Boeings, right? Boeing smashed. You got your Deeres, and you got your Caterpillars, and so forth and so on. Again, it's only 30 stocks. You can go through the list. But you saw, despite all the weakness in these major conglomerates throughout the 8 days of the Dow Jones Industrial was going on, nobody cared, right? Think about it. Nobody cared because, again, you had the hot IPOs, right? You had the stocks like PVTL and CPL, all these crazy IPOs that were going from like 7 to 20, right? 7 to 30. All these IPOs, you had the NASDAQ 100 names. Tesla was going through the roof. Amazon was going through the roof. You had Netflix with this massive price targets all across the board throughout the week. Nobody cared. Nobody cared until people started caring. And the most important part is when sentiment changes, okay, it doesn't come in one day. It's not like you get a sword to the head and the head falls off. It's knickknacks, right? It's these little razor cuts all over the place. And when you started looking at the NASDAQ 100, you started getting clues towards the latter part of the day. And again, just kind of go back, right? Here's the 5-day moving average on the NASDAQ 100, right? The first day, again, very innocently, right? The first day closed below the 5-day moving average, which again, in my opinion, is a really great evidence of short-term bias. Short-term bias, that's it, not Armageddon, not the world's coming to an end, just short-term bias. And it started out so innocently on the same headlines that we've been watching for the last 6 months of China trade war, down and up and down and down and up and down and up and up and up, 52 weeks, right? Everything's all good until you saw the NASDAQ 100 started doing exactly the same thing. And 2 days ago, so innocently, right? And we talked about this from Wednesday to Thursday session. We started out so innocently and say, hey, look, by the way, do you guys see anything same as the Dow Jones? The NASDAQ 100 closed below the 5-day moving average. And again, if it's not a big deal to a lot of people, that's cool, but it's all fine, right? It's all good in the world. It's all fine and dandy until you realize you're in beta, or you're in a lot of really high assets, right, that had a big run, and you don't realize technically the market's kind of showing you all these red flags, and you don't care. It's all fun and games until you get a 100-point pullback in the NASDAQ 100, and you literally give back everything you made within the last month in one session. It's all fun and games until you get a sharp stick in the eye. It's all good. And again, a lot of people, it's not a big deal. It's one day. But what happens when that candle gets confirmed, right? What happened when that candle gets confirmed? What happens when the Dow Jones Industrial Average keeps on pushing everything down? And the question is always, right? The question is always, is the Dow going to pull down the NASDAQ, or is the NASDAQ going to pull up the Dow, right? So we had a gap up on Friday, right? Gap up on Friday. And based on the theory, well, close below the 5-day moving average, if we get a confirmation, we should go lower. And Friday's session was a gift, okay, was a gift. If you watched this video, and everybody through all walls pretty much watched the video, because again, it's incredibly important to be prepared for the next trading day, not because individual setups, because sentiment changes on a dime. A lot of people don't realize when it changes. And when there's a buyer strike, right? When there's a buyer strike and there's nothing materialistically different for the last 6 months, then you have to pay attention. And the problem is, if you're paying attention and you're exposed to being on the other side of technical analysis, usually bad things are going to happen. A lot of people are just not prepared for it. And the biggest problem is your portfolio takes a big hit. Again, if you have overnight exposure. So if you look at what happened this week, okay, again, the Dow goes down, nobody cares. The NASDAQ goes up, the IWM, everything's all good, nobody cares, everything's all good, nobody cares, until we started confirming. And that's kind of a big deal. This is kind of where I want to start the session. So we had this low from Thursday's session, which was 135.37. And we started seeing all the high flyers start gassing out. What does that mean, gassing out, for new traders? Is when the futures continue to rise, especially the NASDAQ and the IWM, and the stocks that kind of led the move up are not participating in that interval, that's a red flag. And when the market continues to go higher and then they start pulling in, start taking out the previous day's low, that creates a shift in momentum. And that's exactly what we saw on Friday. Not only in the ETF on the NASDAQ 100, which I took some cash flow on that. We'll talk about that in a second. But we started seeing a first inning of a possible buyer strike. And that's it. That's all we're talking about. Nobody's talking about Armageddon. We'll talk about that in a second. Nobody's talking about Armageddon. Nobody's talking about the end of the world. We're just in a cycle right now, and it's a first inning cycle. If we start confirming, especially this rising support in the low of the Qs at 173.71, you could potentially have a problem if you're a perma bull. Now, if you're a trader and you're trading both sides of the market, this doesn't apply to you. Again, we trade value, whether it's on the long side, on the short side, it doesn't make a difference. We trade value. And when you start collecting data, and the one common denominator that we have in every single one of these videos, we collect data, okay? We collect data, and we use that collection of data to formulate an opinion. And once you formulate an opinion, whatever process you're taking, again, I trade the PS60 theory, I trade pivots, I don't care if they're the upside, to the downside, as long as they're ranges and the ranges are confirming, usually good things are going to happen because of this 60-minute interval that all the noise is being removed and you're getting definitive confirmation one way or another. So for me, it doesn't make a difference. So going into this week, yeah, we might have a reflection point that the bulls really needed to pay attention to. And if we start losing this 173, or let's just call it 173, 173.71 is the low from June the 19th. You can see this linear regression line again, which provides a little bit of support here. Any close below this 173.34, perma bulls, you better pay attention because we have a nice little gap all the way down to the 170 level. So going into this Friday, going into Friday's session, we were sell biased. I mean, we were sell biased. And if you look at how our day played out, you can see how really aggressive, okay, the buyer strike was very, very early. You saw how aggressive when stocks started confirming the previous day's lows. You saw what happened with these beta names, and there was a tremendous candle all the way from your NVIDIAs, your Amazons, your Teslas. Obviously, you'll see this on the screen here in a second. Your Netflix, and on and on and on and on. Because again, when momentum turns, you're not going to get a tap on the shoulder and say, "Hey, by the way, you better, you should really see what's going on." Potential, no. At that point, you already have your pants below your ankles, and now you're praying for a good outcome. We don't pray. We collect data, and the most important part is once our process gets highlighted on that data, that's when we try to strike with extreme prejudice. So if you look at Friday's session, and again, this all goes to I try to put in as many of these high beta names. Obviously, everything is talked about and discussed way ahead of time in the live webinar because, again, we're trading a very, very specific potential shift in sentiment. And I put as many of these things in our private Twitter feed as possible. And you can just see the way the day played out. Again, this is 9:28, a couple minutes right before the market opened up and say, hey, Tesla, huge run, right? 346 line in the sand. If that gives it up, if that gives up a gains, it could really flush. And again, why was 346 important, right? Why was 346 important? Because if you look at the low, right? If you look at the low in the last couple of days, just the last couple of intervals, right? 346 was the low, 346 and a quarter was the low on June 19th. Thursday's low was 346.27. And oh, by the way, it stopped right on the 10-day moving average. And again, if you've been watching these videos for a long time, you know that the 10-day moving average for me is the birth of the trade to the upside. So if it confirms to the downside, well, right, it's the opposite. It's the birth of the trade to the downside. And you saw it. I mean, 346 breakdown. I thought it had a puncher's chance. We talked about this in morning strategy. I thought it had a puncher's chance to get to 336. It didn't not only get to 336, it got down to 333, and I still like it for impossible another move on Monday. So you had this really big move on Tesla. I mean, really big move on Tesla. NVIDIA, same thing. I caught this NVIDIA pretty well. Again, look at the time, right before the market opened. 256 build lower can flush. Again, why was 256 important on NVIDIA? Again, just look at the chart. right? Look at the chart here. 256.80 was the previous day's low. If you look at the 60-minute view, right? If you look at the 60-minute view, look at the low here, right, guys? 256.01, 256.01. Once this thing took out 256, it just got manhandled, absolutely manhandled, went down to the 250 area. Again, for all you guys who caught it, great job. I mean, really, really good job. And again, it just continued. The stocks that were moving higher, right, with reckless abandon, hand over fist buying at any level, we don't care, the stock is going higher. Eventually, when there's a buyer strike and these 60-minute channels get confirmed, well, what do you think is going to happen? Gravity takes over. By you trading with rose-colored glasses, think that higher prices will continue to go higher with no ramifications, without a safety net. Usually you're going to find yourself on a worst possible scenario of being on a high flyer on the wrong side of the pivot. And that's exactly what happened. Again, 9:29, a minute before the market opened up, IQ, which was one of the biggest movers, right, in one of these IPOs, watch the build. 37.80 lower can flush. Again, why was 37.80 important, right? Look at this whole area here, right? Look at this whole area here. The low here, right here on the 60-minute candle. Again, for everybody who uses these 1-minute charts, look how clean these 60-minute views are. You can see the clean area of support here. And once it broke, right? Once it broke that 37.80, I mean, the stock got absolutely just destroyed, just absolutely destroyed on one candle, almost a $3 move on one candle, really, really big move there as well. So again, you have to be conscious of where stock prices are. If there's a buyer strike, if there's a seller strike, you have to know where the intervals of the market is, because again, if you're trading blind, you can have really, really poor results. I like this BMRN. I still like this BMRN. I put this in also pre-market. Hey guys, watch the $99 build. Why was 99 important? Again, you had this really aggressive move, right? You had this really, really aggressive move on BMRN last week, right? You had this big, big move. It was like a 7.5%, 8% move, put in a high of 98.80. And I said, hey, listen, if there's a consolidation above that 99, it could spike. It didn't give the biggest move in the world, okay? It didn't give the biggest move in the world. It went from 99 to 99.76. I still like it. The fact that it closed above the $99, this is the highest close in this whole formation. So obviously that whole number break off of 100 is going to be very, very important. But again, when the NASDAQ flushed, it kind of, it was very, very hard for buyers to sit there and kind of support bids as the NASDAQ 100 was flushing. But again, not every single trade can be this massive, massive view of going for that 9-run home run that doesn't exist. Some other trades we had in the room, some pretty good stuff. QQQs, I shorted this thing. I let it go through the previous day's low. Again, trading ETFs are completely different than trading an individual stock like NVIDIA or a Tesla or Amazon. Again, you're going to have a lot of high frequency. Yes, and of course, these algos are very, very present in all the other stocks I just mentioned. But when you deal with ETFs, the Qs, the IWM, the SPY, you're going to have so much represented with the algos, so it doesn't make a difference specific numbers. It's almost like a specific area, and you needed to see it confirmed several times. So it broke this initial 35, 37 area, which was the previous day's low. And I actually tweeted about it. I said, hey, guys, if this thing, the longer this thing stays under 175.37, the higher probabilities it kind of flushes. And it stood there. So I finally shorted it and went down to 174.60s. I covered some 174.80, and then the rest I got stopped out break even. Again, with this market, again, we're not at the death toll. We're not at the death toll just yet. We're not in any technical damage yet, so you have to use break even as your stops. Some other names that actually did fairly well. Checkpoint right off the watch list. Again, daily charts. People ask me all the time, what's more important, a daily view or a 60-minute view? Again, guys, a daily view, there's not second to none. The daily view will give you a macro potential of the stock, whether it's to the upside, to the downside. A 60-minute channel will give you sneaky cash flow intervals within that daily view and obviously confirm some daily prices in the process. But we had this thing right off the watch list. Hey, guys, watch the 98 breakdown of Checkpoint. Again, the stock never rallied with the rest of the NASDAQ 100. So if the stock is going down as the market's going up, how is it possibly going to rally? So this thing broke the 98.20, 98 level. And it went all the way down to the 96.68 level. Big, really nice move there. Adobe got absolutely smashed. Congratulations for you guys who got Adobe. We had a triple bottom right here. 247.52, 247.52, 247.50. You can finally see it. and this thing got squashed. It broke that 247.5 and went all the way down to 243. Still looks lower, especially if the NASDAQ continues to pull to the 50-day moving average. So that was good as well. Alibaba, just didn't quite make it. There was a pivot here that we talked about. There was a pivot right over here at this 201 level. It only went down to like $200 and a quarter, and you can see why. Again, all these lines, and I get these emails all the time, why do you have so many lines? These lines are there to show you supply and demand, and you can see here it just couldn't break below that demand, so it was only like a 50 to 75 cent move to the lower. But as you can see here, right, you can see visually what happens when Alibaba starts confirming this whole channel here. Again, this is all contingent upon the NASDAQ 100 continues to pull in. Well, again, we'll discuss that obviously in Morning Strategy on Monday. But again, you can see the potential of what could happen there. So pretty solid. I mean, pretty solid. Pretty solid indeed. Again, I think going into next week, again, these are the big levels here. Okay, these are the big levels. Number one, we have to pay attention. What happens when the futures spike, right? What happens when the futures spike? Is Netflix going higher? Okay, is Amazon participating? Is Tesla participating back? Is NVIDIA finally waking up? And again, I get the whole semiconductor exposure to China. I get all that. Everybody has exposure to something to China and any industry. But again, what happens when the market is actually spiking, when it gaps up? Are these things being sold? These are clues, guys. Again, remember, these are data points and collection points that we're trying to formulate an opinion to put our money in the least amount of harm's way with the greatest profit potential. Are you going to miss trades? Absolutely. Are you going to screw up trades? Absolutely. It happens all the time. But again, you're putting yourself in a position to win. Not only win for today, but put yourself to win for longevity. Again, just because the market's open, it doesn't mean you need to trade. You only trade when you're getting value. When you get no value, right? When you get that proverbial 2-7 offsuit, again, you have to wait because, again, the market is Phil Ivey. The market is, Daniel Negreanu. For all you guys who play poker, imagine playing poker one-on-one over and over again with Daniel Negreanu, okay? Are you going to go in with a 2-7 or are you going to try to go in with, with queens or better? And that's the whole point of trading. You're waiting for the value. When you get the value, I don't care who the hell you're sitting across from. Or you could be sitting across the table from Phil Ivey. You get dealt those aces, there's a very good chance you're going to win. Wait for the confirmation. Wait for the aces. Wait for the for the face cards that you can have an advantage over the market, over Phil Ivey, over Phil Hellmuth, over all these guys that are sitting there every single day going to take your money. The casino, right? The casino. The guys that are going to prosper all the time against you. Wait for those whole cards. So when we're looking at the market going into this week, again, there's nothing here to suggest that we're going to get destroyed. Right? Nothing destroyed. Until we start losing the 173.70 level on a closing basis on the NASDAQ 100, at that point, we start to worry. Well, not worry, but at that point, the bull needs to start to worry. We start to reshift our momentum, reshift our focus to the sell side, and make sure that we are properly positioned for either overnights, right? Overnight on the sell side, or intraday process that we talk about every single day during the live webinar. So until we don't want to put the cart in front of the horse just yet, but this is the level. Again, the market could wash out on Monday, open up at 174, red to green, and we start going back higher, and everything we're talking about is completely moot. But again, don't we at least deserve, at least for ourselves, to put ourselves in a position for the what if, to play devil's advocate before it becomes too late? Again, rose-colored glasses off, collection data on, process very, very important, and have an open mind because the market shifts very, very quickly. So going into the week, I have to say I'm a little sell biased, okay, just before what I saw the last couple of days, especially in the Russell, right? Especially in the Russell as well. Again, 2 days close under the 5-day moving average, and you have your first day close under the 10-day. And again, if you believe in stocks going from supply to supply, demand to demand, well, here's the next demand zone, which is 166. But again, before that happens, we need to see confirming prices going into, confirming prices going into this whole week. So let's talk about some ideas, right? Let's talk about some ideas that I definitely like going into tomorrow's session. Let's start out with some. Let's start out with some long ideas, and I'll give you guys some short ideas. Won't give you everything, but let me give you guys some long ideas and short ideas. I like this cool as a short. Okay, I like this cool as a short. Here's your first inverted hammer. Had this big, massive run, right? Huge, massive run. Here's your first inverted hammer. Here's your first red candle. It closed on the rising support. Again, if this support gets taken out, right? If this support gets taken out, guys, this 37 build, I think the stock drops and you can have a multi-day drop there. So let's keep an eye on cool. I also like, let me give you guys a couple of longs as well. Let me give you guys, everything else is obviously going out to all our members. You have the option flow report. You have everything that we're watching for the next trading day. And I think one of the biggest and also one of the best features about the nightly email, you have the whole 7 hours of the webinar recording. You'll see everything play out live. Again, there's no editing, guys. There's no trick photography. These are live pivots that are strategically placed and very specifically executed because of the whole 60-minute confirmation. And it's a really great tool, especially for all you guys who can't make it into the live webinar. But let me give you guys a couple of other names that I really do like. You know, I like this HSIC. I like this HSIC. It's trying to come out of a channel here. If this thing starts confirming that 75 build, it can go higher. A nice looking chart, assuming the market stays up. HOLX looks pretty good as well. HOLX looks pretty good as well. You had this move. It attempted to come out of supply. You can see the linear regression line kind of stopped it. But if it starts building above Friday's high around the 41 area, you could see a next leg up. I also like this BMRN. I also like this BMRN. We talked about this. It closed the highest close in this whole formation. I think again, if the Nasdaq is strong next week, especially the bios, you could get you could get that 100 break and start really getting an aggressive move higher. So everything else you'll see on the nightly video, on the nightly email. Tomorrow morning, guys, get to Morning Strategy at 9 a.m. This will get to all the pivots on Tesla and Amazon and everything else in between. Guys, I want to thank you very much for taking your time. For all you guys who are joining us via YouTube and Twitter and StockTwits, thank you very much for giving me a few minutes of your Sunday. Have a great remainder of your weekend. And with God's help, I'll see you all tomorrow. Take care, guys. Have a great weekend.